What's up, everybody? Michael and Coco here. You're watching episode 17 of the Weekly Scan.
The Weekly Scan. Yeah.
The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be using technical analysis to review 5 different stocks. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, please ignore our opinions. Because that's what they are. They're just opinions. With all that said, let's get into it. All right, welcome to the computer. We are now going to be jumping into the 5 charts that I have picked out on the scan. These 5 charts were actually really just high up on the scanner as far as volume goes, and the indicator that I looked at, which was hammer candles and relative volume. So I pretty much just picked the top ones from this because they provided some decent patterns. The first one that we're going to be hopping into is ticker symbol AXAS. And this right here, I just wanted to kind of teach somewhat of a trading strategy style. So I actually had a different indicator up right now, the ADX. And this green line that you're kind of watching here is the 20 period moving average. And how you can do this, I learned this from a book called Street Smarts. It's a very older book, but it is a very cool little type of trade, and it's pretty darn accurate. And what you do is when it crosses below the 20 period moving average, the ADX has to be at least 30 at the point. And as you can see, it was pretty much right at 30 at that specific point in time. And how you do this now is you put in a buy stop order that's right here basically at where this candle was before it crossed over. So that'd be at 30 cents. And then your stop loss would go below the low of where it crossed underneath, which is right here at about 21 cents. It could be a little bit higher if you prefer. I like how this hammer candle forms, so that's pretty nice. And then what basically takes place is you look to the previous history of the chart to see where the main pullback was to the 20 period moving average. And that's right up here at between 44 cents or 45 cents and 40 cents. So let's call it 42 cents or 41 cents. So right here in this range would be your target. So your really risk right here is about that much for a reward of potentially that much. It's about a 2-to-1 setup. So if you wanted to, you can actually make this your stop loss just a little bit lower, just right below the 50 period moving average. I would say that'd be a little bit better. So say 23 cents. So then it would mitigate a little bit more risk off this type of a trade. So a buy stop order basically would mean that if the price comes back up and hits this area of the 30 cents, your order would be triggered, and then your sell order, your sell stop would be triggered up here, which is at, or your target price, I should say, would be triggered up here at 42 cents. So right there from 30 to 42 cents is a pretty big spread. Now, I'm not going to, like I said, go much into what the ADX actually is. If you want to look up that indicator, please go ahead and do that. Another thing that I noticed on this chart is when it kind of consolidates sideways, you see a spike up, and it consolidates sideways, and you see a spike up, and then you see it consolidate sideways. This might mean that we might be getting a spike up, but I would like to see the price above the 20 period moving average and break above that 30 cents in order to see the price come up higher to maybe potentially retest that 40 cent level. So nice setup. That's a cool little trading strategy that I wanted to share with you that I learned quite some time ago. But be careful. This is a beta over 1 stock, so it does move really quickly. It is obviously quite volatile. This is just the last day right here. Looks small, but it was a down 8% for that single day. So be careful, manage your risk. Let's move to the next. All right, here is ticker symbol PCG. This is PG&E. The indicator that I'm kind of keeping an eye on is volume and the RSI. The RSI is now moving into oversold territory, and typically when things get overextended or oversold, you'll see the price kind of swing up. Now, it could stay oversold for quite some time, and there was relatively a lot of volume that came in place. So what we do here is we look for an area of support that the price he previously hit, and here at that $7.85 or $8 range, let's call it $8, it might offer up some support. So if the price can break down further down here, you might see a bounce from that specific range. So you need to be patient on this one, but put it on your watch list or make an alert saying, hey, if the price comes down to $8, you can probably pick up some shares and then have a stop loss under the low of this candle, which is $7.85. So you're really only risking, 15 cents a share to potentially earn, wherever this might bounce to, which could be, easily $10. All right, let's move to the next one. All right, here's ticker symbol MGI for MoneyGram. What really kind of popped up on this, how I found this was really just looking for hammer candles and high volume. And what I see here is just a nice little setup. It's somewhat of an ascending triangle, I'd say. If it's kind of going up here, and then you can see right here through the price of 340. So just keep an eye on this one. We might see a breakout to the upside. How I would trade this is I would play the breakout. So if it does start moving up to the upside, you can play the breakout, and hopefully it happens to be on higher than normal volume, because if it is on high volume on the breakout, it's more of, gives you more confidence knowing that it's not a false breakout. You want to see a close above it with high volume to really know that, hey, this thing could move higher. The other way you can potentially play it is if it pulls back a little bit more, you can speculate the price will be breaking out in the near future. So you can buy in shares right here lower, and then have a tight stop loss, maybe just under the $3 range. Now, keep in mind your risk from where it's at now, $3.25 to $3. That's 25 cents a share. So, do the calculations. If you buy 100 shares, that's going to be down 25 bucks. Okay, do the math. All right, let's move to the next one. Here's ticker symbol XELA. This one also popped up because of high volume and this hammer candle right here. I like the setup. It is kind of a symmetrical triangle, maybe an ascending triangle, you can say. But what I do like really is how it broke out high volume right here on this day, and then has been consolidating sideways on lower volume. So this makes me think that, hey, this could just be a consolidation period, and we might be seeing an upside shot here in the near future. Keep in mind, this is also, a fast-moving stock. Make sure that you're managing your risk. Have your stop loss in place, because you don't want to just average down on these type of setups. It'd be much better to just get stopped out and then buy in at a lower price if it does break down. Just by looking at this chart, I would say the breakout point is right around 55 cents. So keep an eye on the 55 cents for the breakout, and you want to see it close above it on high volume in order to confirm that it could be a real breakout. All right, let's go to the next one. Here is ticker symbol CTXR. I feel like this may have been on the weekly scan before. I'm not 100% too positive. I can't recall, but the indicator that I want to keep an eye on here is it's the RSI. It's oversold and it's on high volume, so we might be getting that pullback here in the near future. So what we need to do is we need to look for an area of support, and that area of support that kind of sticks out to me is that $1 range. So as you can see, the price kind of fluttered around $1 here kind of messed around with, right here it did, right here, and basically all throughout this range. So I feel like, hey, if the price can get back down to this $1 and test it, you can have a stop loss just underneath it, and you might see a bounce potentially to the upside. So right there would offer a really good risk versus reward type of trade, type of setup. So you need to be patient on this one as well. Wait for the price to come to you, and then potentially you might see the breakout. This is obviously a low-cost stock as well, so mind your risk. The beta's over 1. It's volatile. It moves fast. Don't want to lose too much money on something like this. So just do the calculations. Set up your trade ahead of time to know, what the max is that you're willing to lose, and so forth. All right, everybody, that's all I have for you. Those are the 5 charts that I'm going to be looking at into next week. If you haven't watched my special edition weekly scan, the link is going to be in the description, and I'll have it up right here at the top of the video as well. That is where I go over just gold mining stocks, and I go over quite a bit of them. All right, have a good weekend.